Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, TractorZoom, delivering insights. If you're looking for what's happening in the auction marketplace and a great way to track what's going on out there in the overall spectrum of trends and those kind of things, what inventories look like on the auctions and those kind of stuff, check out TractorZoom's Iron Comps, and you'll get all this information that you can find. Well, Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and we typically do this in the morning, and I thought, you know what, we should probably wait and see what happens with this report, because typically this isn't that big of a deal, but there was quite a bit of action here, Chip. So let's rewind here, look at yesterday, for example. Everybody was kind of shoring up their long positions, it looks like, and they were selling off. Plus, you got end of quarter, end of month, those kind of things happen too. But basically, everything was put down sharply yesterday. I think wheat was down 15. I think soybeans are down like 26. Corn was down 7.5. So on and so forth. And this report comes out, and everything is just limit up. So I guess as you take a look at this report, let's break it down and kind of walk through what happened here.
Yeah, pretty explosive. It came out the exact opposite that anyone expected. And if they tell you otherwise, they're lying to your face. Everybody thought that the market kind of had the acres pretty well dialed in. And that the real wild card, what could be very friendly, was the quarterly stocks report. It was actually the exact opposite of that. The stocks report was pretty benign, and the acreage was where all the fireworks were. And so you hit the nail on the head. The market had sold off pretty sharply, actually, in the week or 10 days ahead of this report today. And so commodity funds were down to about a net long position of about 90,000 contracts in the beans. And that's about 30,000 contracts under where they were at the peak. They still were long quite a bit of corn. But the dollar had been rallying. So, some of it I think was just into the quarter window dressing, money flow type stuff. But this report comes out today. I mean, it was a mind blower on the acreage. So, the market was very fearful of a big corn acreage number. Some private estimates out there even, kind of talking about the potential for 95, 96 million corn acres. The average estimate was 93.2. We came out with an actual here today of 91.14, so 2.06 million acres below the average estimate. It was actually about 850,000 acres below the lowest estimate. And so corn immediately went limit up on that news. Now, you would have thought with that low of a corn acreage number that the bean acreage number would be very high. And kind of give and take, but we didn't see that either. The market had expected right at about 90 million acres. The high end was 91.5. They came out at 87.6, 2.39 million acres under the average. And again, shot the bean market limit up. So some of this extreme move in the limit up was caused by that big sell-off that we had going into the report. But man, this is a head scratcher, and the market's going to really debate this going forward, right? Because if you add up the total major crops from like 2016 through 2018, you got to kind of take away 19 and 20 because of all the prevent plant stuff. But that total average of those total major crops from 2016 to 2018, 318.8 million acres. This year, if you add them all up, 316.16. So you could argue there's a couple million acres that, are kind of missing. Where'd they go? I don't know. Twitter's blowing up trying to figure that out. I don't know. I don't have a good answer for you because there was nothing outwardly apparent as you look down some of the major crops. We did have the wheat acres a couple million higher than what the average estimate was. But as you look at some of these minor crops, sorghum was up 1 million, hay down 500,000 acres, oats down 500,000, rice down 300,000 acres. Sorghum got record strong sorghum basis in the plains, as up 1 million acres in the sorghum. But there's a couple million acres that you could argue are kind of missing right now. They won't change that at a minimum until the June 30th acreage report. That's when the next time they'll revisit acreage. That's supposed to be the final acreage number at the end of June. Due to prevent plant the last couple of years, that hasn't been the case, and they've done resurveys because of late planting and made some revisions all the way up into the January crop report. But in a normal, quote unquote, normal year, the June 30th report will be the final acreage number. So we got, 3 months here, and we're going to go off of those numbers. And the issue is when you plug those acreage numbers in and trend line yields and assume the demand that the Ag Outlook Forum from the USDA in February had plugged in for corn and beans, I mean, even with big crops, we're about out of beans and we're pretty tight on corn. And so that's the main reason for the limit up. The stocks numbers, again, this isn't ending stocks. This is quarterly stocks. So they do a snapshot of stocks in farmer-owned storage, commercial grain elevators, barges, and trains in transit, anything that's not been shipped out of the country yet as of March 1st. And so those came in about as expected, 7.7 billion bushels on corn. That was 66 million bushels below the average estimate. It was 251 million bushels lower than a year ago on March 1st. So we know that we have big demand and good exports. And so it was, as expected, lower than a year ago, but nothing that would have said, hey, we got to be limit up. On the beans, actually 1.56 billion bushels. That was 23 million bushels above the average estimate. But, we know it's tight out there and not many old crop beans left. 691 million bushels lower than a year ago, March 1st, quarterly stocks. And the wheat number, 1.3 billion, 36 million bushels above the average. So those were all pretty good, pretty well in line with what the pre-report estimates were. So the market did a really good job of actually kind of pegging the stocks number, but really off on acres. And, for the good now, limit up in corn and beans both, sharply higher in the soy products. Wheat was actually probably arguably a little bearish, but it's going to follow corn. So now you have a short week here. There's no markets Friday for Good Friday. Yeah. Normal day tomorrow, Thursday, and you've got expanded limits in the grains, so we could see some fireworks here. So it sets the stage, Casey, for a real interesting growing season here, and the bar is extremely high. Any minor blip anywhere along the way, with too wet like it is in the South right now, too dry like the northern plains are trending that way. that continues into, June, July, August, this market could get extremely explosive. I don't want to get too bulled up. I think as a producer, you have to still look at profitability and use this rally as an opportunity to, put yourself in a position, and there's multiple ways to do that. You can make sales and attach calls, or you can buy puts. Either way, the upside's open. In case we have a hiccup, we're going to some stupid numbers to the upside. And, but, a lot of things can change between now and fall too. And, we could find these acres back. We could see demand, which is at a massively large estimate right now. We can see demand shrink and disappoint. The dollar's starting to rally. We got to really watch that into the second quarter. Obviously, a lot of financial market things and political things happening. So there are some things that could throw a monkey wrench in this. But at face value today, wow, wildly bullish from an acreage standpoint.
All right. So with what you just rambled out there, how's South America fit in that mix?
So we're far enough along that South America, I think we've digested a lot of that, right? They're 70+% harvested on their beans in Brazil. They're still ongoing in Argentina. So we're kind of past, I think we have big markets, big crops digested down there. They are about done planting their second crop corn. So that's going to be the next real item to watch is their second crop corn. So April, May, June is very important for them, particularly from about the last half of April to the end of May is critical for their second crop corn down there. It's a little bit dry, has been the whole growing season down there. So if that trend continues, which by the way, that is their dry season is, April, May, June. So they're going to need some rain on that second crop corn. Now with this acreage number here that we got for us, that makes it that much more important that Brazil has a big crop on their second crop corn that's basically just been put in the ground right now. So critical, 60, 70 days ahead for them. And that probably is the next item that could affect us. Now, next week on the 9th, we've got our normal monthly crop report from the USDA, the April crop report. We'll get updates on any demand. We'll get updates on world production numbers. So there could be some tweaking there, particularly, the market's going to watch those South American numbers, see where the USDA has those projections. And then the real important one comes in May. So, a month from next week comes the May crop report, and that is the first snapshot and estimate of new crop, production again. But what they'll do is they'll use this acreage number today. They'll use trend line yields, which are up around 179 in corn and I think just north of 50 in beans. And then the real important part of the May crop report is going to be what they do with demand and what their assumption of demand is. And so this thing's gonna get really interesting. We figured it'd be a wild one, but this assures that it's going to be even more so as we go forward.
Yeah, the volatility thing is now setting the table for some swings. These wide swings that we could possibly see based on these month-to-month reports.
Yeah, unbelievable. And it doesn't always have to be make sense either, right? I mean, without this report, the price action, the charts were not in very good shape in corn, beans, and wheat especially. I mean, if you didn't have this kind of bullish shock, I'm afraid the corn and bean market were about to roll over and put a bigger correction in. It does look like there's an early spring coming. Around here, central part of the Corn Belt and the I-States, I know specifically in Illinois, it's pretty chilly out there today, tomorrow, and into the early part of the weekend, but then it's warming up into the upper 70s, going to approach 80. If we don't get some rain, we got a chance of rain this weekend. If we mostly miss that, there's going to be corn and beans going in the ground in central Illinois next week. That's pretty early. That's not bullish necessarily. When you have corn and bean planters rolling in the first week in April across the I-States, that's not a bullish scenario brewing there. but I know we're not in a vacuum either, because there's dry weather on the radar in the Dakotas. There's too wet in the South, particularly Tennessee. They should be planting right now. They just got pounded with rain here within the last week, 5, 6, 7+ inches flooding. So there are some little pockets that are popping up that could affect things still this spring.
Yep. And weather patterns, same thing you're talking about out here. I mean, we've got same deal. It was 20-some degrees this morning, 20-some degrees yesterday morning. And I think going through the weekend, it's kind of starting to warm up. Sunday's highs in the 60s or 70s, so, our sugar beet guys will be going. Typically they plan on the 15th, but if it's 70 degrees next week, there's going to be a lot of guys that are looking at, hey, I'm just going to go ahead and start now and get it out of the way, because there's nothing on the horizon right now that shows any real foul weather coming in the next 30 days. There's no models that I've seen where they've shown that. So it's going to be an early spring, probably earlier than what we saw last year. Get stuff under the way, and everybody reads into that as being, oh my God, it's going to be the biggest crop ever now because we got these extra growing days and so on and so forth. And there's a lot of dryness creeping in to the western part of Iowa and Minnesota and down that way now, Missouri and those kind of places too. But the flip side of that too is when you start looking at all the moving parts that we see happening here. I mean, this winter kill issue that we see with potential winter kill issue that we saw in Kansas and Oklahoma and Texas during this Nebraska, Colorado, and this big freeze that we had. That's how much of that you think is even factored into what we saw yesterday or today? I mean,
yeah, I don't think any of it, honestly. That kind of seemed to have went away, and the market started assuming we don't have any problems from that. I don't know if that's the case. It may take till harvest to kind of figure that out.
To really see it,
So to your point, Casey, I don't know that we've seen or heard the last of that freeze and winter kill issue that we had. We did get some rain. I think the market focused on that, and that was beneficial. But again, I'm not sure that one rain event is going to make that crop. So that jury is still out, and I think it's going to take till late May, June to kind of get a little better handle on that. So that's still something that could affect things. So a lot of stuff working here that it's going to push and pull these markets. But now the bar is just so high, right? Because of this acreage thing and because the demand. And those are two things I think that we need to keep in the back of our mind here is wouldn't be a shock in my mind to find back some acres here eventually. Typically early planting, you pick up acres anyway, right? Especially in corn. And it looks to me like it could be awful early in a lot of areas. So I think eventually on the June report, we could see a scenario where you could maybe have this be the smallest acreage number you see and add to that. And I'm fearful too, big picture, that we've got the demand assumption too high. It's the exact opposite of a year ago. We had the demand assumptions way too low. We were nervous that China wasn't going to fulfill the trade agreement. We weren't going to buy. Ended up, they had crop problems. They had African swine fever issues trying to repopulate their hog herd. They needed the grain. I'm not so sure that's going to be the case because I think part of that was a poor crop that they raised last year. And, they've done at least some steps to restock those supplies. And if they have an okay crop, I'm not so sure that maybe we don't have the assumptions of Chinese demand way too high for this new crop. And you won't know that overnight. That's not going to be next week or next month. But if you get 3-4 months down the road, 5 months, and we're not seeing China continue with the buying that they have been on that same pace, we're going to have to start lowering the demand projections, and that's just going to go right to the bottom line. And if you find back, even if it's 500,000, you find back 500,000 corn acres, 500,000 bean acres, we raise big crops, all of a sudden it's not quite as bullish as what it looks like it could be today. So that opens the can of worms up for some massive volatility. And, I just think it's prudent anytime you can get, north of $5 new crop corn and north of $13 new crop beans, and it's not that far away, especially with expanded limits tomorrow, I just think a guy's got to be thinking gross margins and what can I do to lock profitability in, but keep the upside open, because that's a pretty good feeling through the summer, right? All that volatility, all that uncertainty. You can put yourself in a position that it really doesn't matter if corn ends up at $7 or $3.50 and beans at 17 or back to 10. You're covering your margin. You've got profitability locked in, and there's a lot of other things to worry about, and price doesn't have to be one of them. And I think, fingers crossed and knock on wood, we might be in the process of kind of getting that stage set where we can kind of do that. And that's a good feeling. It's going to take some maneuvering, but that's a good thing. It's been a long time since we can have done that.
Yep. And especially with the tightness of the stocks and what they look like right now. I mean, like you said, one little micro blip either way is going to make a big swing in the markets too. So plenty of stuff for guys to be thinking about.
Absolutely. Livestock side too has been very interesting. Hogs on a huge tear here. June hogs north of 105. Personally, I think we got potential for maybe all-time highs in the hogs here. We're not even in the main demand season. Getting north of 100 in March, pretty unprecedented. Cattle finally turned the corner. Box beef has really shot higher. We've seen better cash trade here finally. And now today you had a weird deal, right? Limit up corn should have been sharply lower, if not limit down feeders. They did close lower, but something strange happened here. June cattle were able to close higher on the day, about $1 or more off their lows. You're finally, and we saw this in 2012 too, with a big run higher in the grain and bean market. It eventually spills over and the grain start lifting the livestock. And I think maybe this cattle action today is starting to hint that. So if we continue up in corn, I think that'll actually start being a friendly scenario to the cattle complex and actually pull that higher. But you got some explosive potential in the livestock sector. So it looks like from an ag side in general, things are looking pretty good right now.
Yep, good stuff. Well, no better reason for folks to be looking at their plan and revamping that plan and dial that stuff in, just like you've been talking about. If folks want to reach out to you and see what kind of help you can give them, what's the best way to do that?
Yeah, best way is just give us a call at the office, 309-550-7213. Love to chat with you. Lots to talk about right now and lots to think about as it comes to building and executing a marketing plan going into this growing season here.
Right on. Well, thanks, Chip, for being on the podcast.
You bet. Always fun, and it's going to be more exciting now with this report. That's for sure.
Absolutely.
Just pushed a few more chips in the pot here, so this poker hand is getting pretty interesting here.
Plenty of stuff to keep you busy, that's for sure. So, all right. Well, I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also, go to MovingIronLLC.com. That's where you're going to find the latest editions of the podcast. Also, blogs over it. And also, you're going to be able to find information about Moving Iron Summit coming up in Nashville, Tennessee, September 15th to the 17th at the Renaissance Hotel right there off of Broadway. So, a lot of great information there, a lot of great speakers, a lot of great places for people to come and network. So if you're a dealer of any kind and you want to get information about that, hit me up at Moving Iron Podcast and MovingIronPodcast.com, or just go through the website there. At the top, you'll see the Moving Iron Summit link. Follow that link and you get all the information about how to register for the event. So with that, I am Casey Seymour with Chip Nellinger. Let's go some iron, folks. Out.
You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.